Welcome to the Alternative Investor. Well, the listed property market surprised on the upside, returning more than 17% in 2021. And this was helped, of course, by better than expected financial results. But to look at what is happening on the office side of things, we are joined by Keillen Ndlovu, who is the head of listed property at Stanlib. Keillen, thank you so much for your time this afternoon.
Good afternoon, Nastasia. Thanks for the invite.
So let's talk about the office market. I mean, how big is it when it comes to exposure?
So if you look at the All Property Index on the Johannesburg Stock Exchange, the office market makes up about 21% of the underlying properties owned by the listed property companies.
Right. So when we take into consideration, COVID-19, I mean, what was the office market like in terms of performance? Was it as bad as we're currently seeing it right now, or did things take a turn for the worst when COVID struck?
So it's been tough. So what you're looking at, most people still working from home. I would say the office market in Sandton, which is a big office market, probably 80% of the desks are empty right now with people working from home. And right now I'm just doing a couple of site visits. I'm at a construction site looking at what are the options available for some of that space. So it's been bad from that perspective, more so around the vacancies. We're seeing the vacancies start to trend upwards. They were about 13% before COVID, now beyond 15%, and likely to get to the 20% levels. As leases expire, we'll find that some corporates will require less space.
Right. When it comes to those vacancies, I mean, in which nodes are you seeing an alarming trend, or rather a concerning trend?
So it's mostly in the B grade office market. So what you call this P grade, which is like your best properties, the new ones, and then A, B, and C. So the B to C grade, mostly in the nodes like Rivonia, Bryanston, in Johannesburg, you're looking at vacancies anywhere between 30 to 40, as much as 45% in some instances. So that's the older buildings, which tend to attract less quality or tenants or corporate tenants. So that's where most of the challenge is right now.
Given what you've described a little bit earlier on, can we expect any new developments, or what we're seeing right now, is that something that was concluded before COVID?
Yeah, so what you see right now, it's basically that it was launched before COVID. Once you start building, you can't stop. You have to complete the building. So right now, the amount of new space coming up as a percentage of total existing office space is less than 1%, probably 0.5%. Whereas it peaked at about the 7-8% levels during the good times, or what we call the boom times. So not much coming up going forward.
You know, when you drive around Sandton, there's a lot of shiny buildings popping up. In fact, some appear empty. My concern, or I suppose maybe you can clarify for us, what happens to the older buildings? Are we starting to see some innovative ideas in terms of how to fill them up?
So there is still early stages. Like I mentioned, I'm in the construction side now. It's one of those buildings which used to be offices. They're being reconfigured into residential. So there is residential coming up in the main nodes. And we hear that even all those places I mentioned, like your Bryanston, Rivonia, there's going to be more residential coming up. And what's critical, it has to be more affordable residential. Because high-end residential, there's not a big market for it. So residential is the first alternative. You may see other things as well, like storage, maybe supermarkets to support residential, as well as gyms and lifestyle centers. So that will come at a later stage, including some space being used for distribution centers to support online shopping. But right now, we're looking at residential.
Right. What's the impact of the work from home idea? I mean, I see some corporates have embraced it completely, might not be returning to the office anytime this year, possibly next year.
Yeah, it's a tough one. So the critical thing is you need the vaccination rollout program to kick off, and it hasn't really happened. So that's the biggest challenge, to bring back people to the offices. And there's a potential red wave as well, and we're going into winter. So probably unlikely to go back to the office over the next couple of months, even up to end of next year. We have some corporates saying is probably next year. And we are working from home. I haven't been back to the office. I haven't been in the office since March last year.
Right.
But
when you look at the data, yeah. No, sorry to interrupt you there. Keillen, I was curious to know, I mean, when you look at the data, how does South Africa's listed property market compare globally? I mean, are there similar challenges?
Yes, there is similar challenges. But the office market, if you look at the global property index, it's about 8%. So South Africa has got more than double the office space at about 21%. But the challenges are fairly similar. I guess in the developed world, is that like some markets, they've been embracing working from home even before COVID. So it's been an easier adjustment. Whereas for us, it's happened post-COVID. That will be the different challenges.
Given what you said about, a possible third wave and, the slow inoculation rate, what's your outlook for the office sector?
So we saw values decline by as much as 15%, the physical asset values 15%, and we're looking at another 5 to 10, probably 10% decline in asset values. That's number one. And number two, the structure of the leases will change from the fixed leases where you sign it and it has to be like 3 to 4 years, and with flexible structures to allow the tenants to exit when they need to or expand when they need to.
All right, Keillen, thank you so much for your time. Let's leave it there. Thank you for joining us. Of course, we would like to have you back on the show. Lots to discuss, including where you're seeing office property values going, as well as property companies or REITs. What are they doing with their office exposure? But that is Keillen Ndlovu, who is the head of listed property at Stanlib. That's it from me. We'll be back tomorrow with more markets news. Goodbye.